Hello, guys. Welcome to the show. Glad to have you guys here. Now, on this show in particular, what we're going to do is we're going to get started. We're going to move into the markets rather quickly, and we're going to talk about what's going on in the world with the markets. So let's get started. Let's open up the charts right here, and let's take a look at what's going on. First off with silver. Silver's down 5 cents on the day, but you know we had a good Friday for silver. Silver went up quite a lot on Friday, so it's drifting downwards today, but it's not losing steam all that fast. Let's take a look at gold. And what we're seeing is gold's down $3.40 on the day at $12.94.30. Let's go back to silver for a second. What was the price? $15.26 on silver. So they're both drifting downwards, but only slowly. Let's go back to gold. $12.94.30. So they are drifting downwards, but very slowly. They had pretty good gains on Friday, and they're managing to hold on to those gains so far early in the day. Let's just see how things transpire during the day. I think. Well, I'll say what the reason I think is, but let's move on now to cryptocurrency. And let's take a look at what it's doing today. What we see cryptocurrency is still in the bear market. It's been trying to recover from this bear market, and it's just been basically holding its own with a slight movement upwards over the past little while. Cryptocurrency's actually been doing good ever since it hit 31.22 in price. It's been doing pretty good, to tell you the truth. And I see a turn in the market, a change, actually, in the market when it hit 31.22. When it hit that bottom of 31.22, I see an overall change in the market. Before 31.22, what Bitcoin was doing was people were selling off their Bitcoin, a lot of them because of losses in the market, you know. And so every time the stock market would fall, Bitcoin would fall. But what I notice now is once it hit 31.22, I notice a change in the reflection in the market. Now when the market's falling, they're buying back in. They're buying the Bitcoins that they sold. They're slowly accumulating again now at this point. Probably the same players who were selling Bitcoin off every time the market made a downturn. They were selling some Bitcoin off to cover some of their losses in the market. Now they've changed direction and they're accumulating again every time Bitcoin hits a low. These same guys probably doing it, you're going to find. So let's take a look now at cryptocurrency market capitalizations. And what we notice here is a $133.6 billion market cap with a Bitcoin dominance of 51.7%, you know. And what we see is, now I'm going to say something about Bitcoin and these altcoins. You know what I'm going to see happening and what I'm going to predict is once cryptocurrency's established itself, I mean really established itself. Right now, Bitcoin is the big name in cryptocurrency. It's what everybody knows. But once it's really established itself, Bitcoin's leading the way. It's like an Amazonian warrior going through the woods, cutting the trees down with a machete, you know, and cutting the brush down with a machete, making a trail. It's trailblazing. And then others follow, and after a few years goes by, you got a road going through there. And that's what's going to happen. Bitcoin is trailblazing its way through the world, and all of these other coins are followers. And they're going to create a road in the financial system that's going to be well-traveled in the end, and people are not going to question the value of Bitcoin ultimately in the end after this road is established. Well on the way to establishing this road, but that's why Bitcoin has a 51% dominance in the market. Now, after this road is established, I think you're going to see these other coins. Some of them are actually better in the way they function than Bitcoin, and I think you're going to see Bitcoin's dominance fall at that point. It's going to fall down, down, down. It's never going to go right down too low, but it's always going to maintain a certain dominance. But I think you're going to see that percentage fall from 51. I think you could see it fall down half of what it is now to like 25% dominance in the market. And these other coins start to take up some of this especially Litecoin, start to take up some of this positioning. It's positioning in the market is what it is. Now let's take a look at oil today, because oil is an extremely important commodity as to the world, because this is an oil-based economy, and we see oil just going along sideways right today. It says at 40 up 0.42% or 0.75% at 56.49, but I see it going along sideways basically ever since it made that bottom back at $43.93 back on December of 2018. It moved upwards a lot, but now just in the past little while, it's been starting to go along sideways. So now let's take a look at the pre-market data. We're looking at the market down 166 points today on the pre-market. But here's the thing, guys. There's talk of China. Well, I'm going to get into that in a minute, okay? I'm going to hold on that just for a minute. But let's suffice to say, I think that we're going to erase these losses in the market likely today, and the market's probably going to stabilize. It might end up actually going up just a little bit toward the end of the day. You know, we've been seeing these late day rallies, you know, and the market, I think, might end in the green today before the day's over. We might end up maybe 25 or 50 points. But it's not really a rally. It's just news of something that's happening in the world right now. Let's take a look now at bonds and rates, market bonds and rates. We're seeing the climbing bond yields today. There's not so many investors coming in today. The fear is subsiding a little bit, and we're seeing the bonds start to bounce back a little bit. But the yields are really low right now, really low. And this is because we've seen tremendous buying, and this is being caused by fear. It shows me that the first place that they're running investors for safety is into treasuries. You know, that's their first place to run. But you know, when the real fear comes, they're going to start to change directions a little bit. Got to keep our eye on this. I'm thinking when that happens, I think you're going to see bond yields start to rise again, precipitously. Let's take a look now at the U.S. dollar index. And what we're seeing today in the dollar index is a strong dollar, 97.31. It is down 0.8%, 0.08%, but that's only marginally down. It's not down very much. 97.31 is quite a strong dollar, very strong dollar. And in fact, 97 is the point where emerging markets, you know, they have to pay back debt that they've borrowed. They borrowed U.S. dollars back when the dollar was weaker. I don't think they ever expected the dollar to climb up to the strengths that it's climbed up to now, and they have to pay that money back. 97 is the mark where they just start to get in trouble paying these debts back. If the dollar climbs over 100, it starts to get very difficult for them. So 97 is that mark, and we see the dollar has moved over that mark quite recently. It's 97.30, but it's just right on the mark. It's not really up into the danger zone quite yet for emerging markets. Now, we got to take a look here at Zero Hedge, what they're saying here, and this is probably the reason why we're actually seeing a market that's going to rebound a little bit today. There's only one place for China to go now at this point. They're going to have to double down and borrow more money. They're going to have to keep dipping in to the money borrowing pot in order to keep their economy going and keep their economy afloat. They're caught in a stimulus trap. China is now at this point, you know, and actually the whole world is. They're going to have to keep stimulating these economies because the natural inclination of the world economy right now is to deflate. This is the natural, this is what's coming, is monster deflation. And this is a pipe dream of the Fed, that they can go ahead and withdraw liquidity from the system and raise interest rates. That's a pipe dream. The real truth is they're just like a guy who says to himself, well, tomorrow, I'm going to quit smoking. So he's all got good intentions and everything, So he leaves the cigarettes off. The next day, his fingers are trembling. He feels his heart beating really fast. He feels like he's going to have a panic attack, and he's got a cold sweat and everything else because the nicotine has got a hold on him, What happens in the end? Bam! He's right back to where he was. And then he lays back in the chair and he's, I feel so much better. After he has one. This is what the world is right now. It's addicted. It's addicted to cheap and easy money, and it can't quit. If it quits, the deflation starts to take hold, and it's like the side effects. It's like they're going through a withdrawal. And so what's happening right now is the Fed got away with it for a while because there's so much liquidity sloshing around in the system. They've drained out all that excess liquidity now. Everything's starting to get ready to crumble, the whole world. So they're all going to have to go back to stimulus. This time when they go back to stimulus, it's going to have more of a profound effect because they're going to have to do bigger stimulus, ultimately. Ultimately, the stimulus is going to have to get bigger and bigger and bigger in the end, until ultimately what it does is it leads to a people not having any faith in these currencies. So then what are they going to do? Well, of course, they're going to change their currency. They're going to do a reset into a cryptographic currency. And then is that going to work? Hell no, because their cryptographic currencies that they're going to create are going to be just cryptographic versions of fiat. And that's going to take it down even faster, because those cryptographic versions of fiat then, which are basically blockchain fiats released by the governments, are going to go toe-to-toe with these decentralized cryptographic currencies that are structured in a way that's totally different. And this is why they've gained value. This is their appeal. This is the appeal of Bitcoin. It's totally different than the fiat. And so their fiat cryptocurrencies are going to go toe-to-toe against what I'll call the king, Bitcoin. They're going to fail miserably. And, also this is going to make an open door for gold. An open door that's never going to be shut. Again, they're trying to shut the door on gold and silver. They're trying to suppress the price. Ultimately, gold and silver is going to bounce out of the box, and they're going to be the strongest things to own, against these fiat currencies, ultimately, in the end. So the big winner in these battles is going to be gold, silver, and the deregulated, decentralized cryptocurrencies. These are going to be the biggest winners in all of this, ultimately, in the end, because the government's addicted to stimulus. They can never get off of it. And ultimately, this stimulus, in the end, is going to destroy the fiat currencies completely and utterly. Listen, thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye, guys.